good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-CEO of Paymentology, Abe Smith. Great to see you.
Hi, Elliott.
All right, so before we get cracking, we're going to learn a little bit more about Paymentology. So, Abe, you're a card issuer, but you're clearly more than just, churning out rectangular bits of plastic. Tell us more about Paymentology.
Thanks, Elliott. Well, technically, we don't issue cards. The card issuers are our clients. And what we are is an issuer-side payment processor, which sounds complicated, but in essence, what we do is relatively simple. So we sit between typically the scheme, be it Visa or MasterCard or another, and the issuer, and we take care of the piping between those two things and the data flow, and we help the issuers make decisions. Primarily we help them issue the card in the first place, be it physical, virtual, or somewhere in between, and we help then make the decisions in the data flow in between in kind of milliseconds. So authorize, not authorize, offer particular products. Is this fraud? Is this not fraud? So effectively, you can execute your card transaction in real time. So it's a suite of, if you like, card management services.
Can you give us a sense of the traction Paymentology has been getting, and perhaps your path to profitability if you're not already there yet?
So it's been an extraordinary journey for us. So the Paymentology itself was founded 5 or 6 years ago, and when I joined just over 2 years ago, it was 50 folks with some incredible IP and a few kind of keystone clients. Today it's 600 people in 50 different countries around the world with just under 400 different clients and a kind of meteoric growth rate. We are wholly owned by the Alteir group of companies, which is a fantastic parent for us because they effectively offer a merchant ecosystem. So they are both parent, investor, and also arm's length client, which enables us to do a few things. Firstly, learn a great deal. Secondly, grow with our arm's length client, and also invest in the company's future without having to spend a lot of time in the marketplace raising capital. As a company, we are kind of relatively unusual insofar as we have a comparatively low burn in comparison with our growth rate, which, particularly in current market circumstances, is probably something that is healthy.
What new products and perhaps new markets can we expect from Paymentology in the near future?
Well, we are in 50 different markets currently. Well, we are in 4 different continents, 50 different countries currently. But we're always looking to expand. We're not as yet in the United States, so that's something that we are actively looking at, which will happen either organically or by acquisition, or a little bit of both. So you can look out for that possibly later on this year or maybe early next year. In terms of kind of new developments for the company, obviously we offer credit, variety of different credit solutions, debit and prepaid. We also offer that not just with physical cards, but on a kind of virtualized basis to all of our clients. And I guess more importantly, we do so on a cloud-native basis. So for our clients, what that means to them is, unlike perhaps more traditional providers in the marketplace who are on-premise or running out of a data center, we can spin up very, very quickly in a cloud, in any country, in any data center environment, but also not just on a shared but a dedicated basis. Some clients have on-soil requirements, i.e. their data cannot leave the country, and they may have the requirement for a dedicated solution. And unless you can do all of those things, you can't get to those clients. So those are all things that we currently have, and I guess to some extent account for our competitiveness and our stratospheric growth.
So we've heard a bit about Paymentology. Let's now get to know Abe a little bit better. So Abe, This isn't your first rodeo as a fintech leader, although you didn't found a Paymentology. You've led and founded other fintechs over the years. And I see from interviews you've done in the past, it's not always been plain sailing. What for you have been the best and worst days as a leader in this space?
Let's start with the worst. So I think that there's an old saying, I think it might have been Churchill, it was dangerous to quote Churchill, but the saying is, when you're going through hell, keep going. I remember having multiple rejections from investors, back in the day when I was trying to launch companies, and it can be very disheartening. But if you do keep going and you believe in your product, eventually you'll get traction. And so that's happened to me more early in my career. Growth pains are always a challenge. Sometimes what you promise to a client exceeds your capability to deliver. Sometimes it's the other way around. And so long as you keep investing and keep working on your product, then you go through those issues and pains. But it can be unnerving at the time. So I guess the pain of establishing and funding a company, the pain of growing a company, they're all kind of generic and well understood by founders.
I think you said that you almost went bankrupt once with one of your ventures. Is that right?
Well, no, personally, back in the day, I see. Have you read an essay of mine, an essay to my former self? Look at that. Yeah, back in the early days of one of my startups. Yeah, I mean, you have to give it everything, and in my case, giving it everything meant funding the early stages of the company myself, and that's the time that you really have to hold your nerve and believe in yourself. And your team. I was lucky, but I also worked hard, and it turned out that company did quite well in the end. But it's a very nerve-wracking experience for anyone who's gone down that road.
Okay, and I think you've also said that thanks to the successes you've had, you're pretty much set financially on a personal level. So what drives you now? What's the motivation? Not that it was necessarily financial gain to begin with, but what's the motivation for you to, whether it's at Paymentology or the investments that you made, what drives you?
I don't think it's ever been financial gain, and I've yet to meet a really successful entrepreneur for whom the intrinsic motivation is financial. For me, I was originally an architect. I guess you'll come on to that later. But I found myself actually more comfortable on the deal-making side of business, and delivering a value proposition which is new, and putting my creative energy into something which nobody had done before, and which gave me the chance to be really differentiated and create enormous amount of value. And so, if you look at any of the ventures I've been involved with, whether directly as a founder or tangentially on the executive team, if I didn't believe that that enterprise had the capability of being number one in the world at something, changing a marketplace, and doing some good in the world, then I wouldn't do it. And the inspiration I feel is the success of that journey along the way. Really, anything financial is a pleasant secondary benefit of all of those things, which are the main drivers.
You correctly said that architecture was among my other questions. It was actually my next question, which is that you studied architecture. I didn't realise you'd actually worked as an architect. Were you not very good at it? Did you just love founding companies instead? What went wrong on the architect side, if at all?
No, I do refer to myself as a failed architect. I studied architecture and I did some of the experience. I never went through with the entire diploma, unlike some of my friends from university. I think it's fair to say I'm a better businessman than I am an architect. Halfway through my diploma, I had friends working in the city who seemed to be making an inordinate amount of cash, and I went to the dark side. I worked a couple of years in financial services before, in the, I guess, mid-late 90s. I moved over to what was then a business communications agency who had a nascent internet business when the internet was just becoming a thing. And since then I've basically founded, built, run, and sometimes sold fintech businesses.
Okay, lovely. So look, a key part of this interview, Abe, is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Paymentology co-CEO Abe Smith. back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now Abe, let's talk about the future of finance. So we've got rising interest rates, we've got stubbornly high inflation, and I guess recession fears haven't completely gone away. How is this impacting consumers' spending and saving habits? And I guess you've got a nice overview of how this is happening in all, was it 50 or so of your markets, right?
So, yeah, I mean, what you've summarised is kind of more prescient in Europe and the States. You know, we do business all over the world. It's not the same story all over the world. And so, what are the kind of common trends that we see? Perhaps on the consumer side, we haven't seen a massive slowdown of spend on the consumer side. Perhaps I'm not sure why that is, to be honest, Elliott. It may be that the cohorts that we deal with, you know, who are the clients of some of the more progressive fintechs and neobanks, high growth companies, are not representative of the public at large. What we do see is kind of an environment where you know, the cost of capital is higher than it was, which, you know, traditionally, as someone who's quite old and has been through a few cycles in investment, traditionally that means there's a shift in the equilibrium that you focus on in your business between growth and profitability, and we're not exempt for that. You know, luckily, as I said, we have a relatively low burn and a reasonable growth rate, but it also does affect some of our clients. So some of our clients find it more difficult to raise capital. Some of our clients are being more conservative with capital. But again, that is, for example, less prevalent in markets like the Middle East, where we're particularly active. So it's a mix. So it's difficult to kind of generalize, but to the extent that I can, those are the effects.
And you've already told us that your fintech is somewhat different, given that you are part of a parent company that gives you excuse me, a lot of support. But right now, we've seen that it's not plain sailing for fintechs. You've been doing this for 15 years. You've seen highs and lows in the market. You talked about the high cost of capital. There are fintechs going out of business or being forced into mergers and the likes. In terms of this kind of backdrop for fintech, is this kind of among the worst of times that you've seen, or is it just very, very bad compared with how things were, you know, 12, 24 months ago?
Absolutely not one of the worst of times, and I've been doing it for 28 years, so let's assume that you think I'm younger than I am, and I'll take that. But you know, I lived through 2008. I lived through I actually lived through the dot-com bubble bursting. I don't know if you remember that, Elliott.
I'm older than you think I am.
So no, look, I mean, everyone has every kind of market cycle has commonalities, and everyone has differences. You know, do I think this is particularly worse than others? No, I mean the dot-com crash was and 2008, the credit crunch, in many ways were significantly worse. I think clients, you know, you can see clients become more discerning. And particularly, you know, when clients, and particularly established clients, because we do business with a range of clients, not just fintechs now, but also neobanks and also grade 1 and so tier 1 and tier 2 banks. And those guys are looking for a difficult compromise between innovation and kind of a modern suite of services. But what they also don't want to do is take the risk of not just being a client, but also being an investor. Because if you are the client of a company who is burning cash at an extreme rate, then you take on the risks of not just being a client, but the risk of being an investor too. Which is why, you know, we are in a privileged position of being, you know, financially very stable, with access to capital should we need it, and a relatively low burn, as I said, but offering what we think is a kind of a market differentiation in terms of payment processing. And that's material in the downturn.
Right, and as I say, you know, putting Paymentology aside for the moment, given the high cost of capital, the struggles that some are having in terms of fundraising, and I suppose the opportunities to those that did raise money and are in a stronger position, do you get a sense that we may be on the cusp of a kind of mergers and acquisitions boom in terms of fintech?
No, I mean if you look at deal flow for M&A, it's down by most metrics on where we were like a couple of years ago. I do think, however, that there'll be consolidation in the marketplace. It's a natural thing. Some folks, particularly on the issue of payment, I can only really speak for the issue of payment processing side, will not survive. Some folks have already gone to the wall, and some folks will have to merge to survive. So I think insofar as market-driven M&A activity, that's the sort of thing we'll see increasingly over the next 12, maybe 24 months. But then we'll emerge, like as always, to see more positive M&A activity, an increase in listings, increase in sales, that kind of thing.
And as you were explaining earlier about what Paymentology does in terms of facilitating card issuers and enabling whether it's digital or physical cards to be authorized and to be issued and whatnot. We clearly see, with the rise of open banking in payments and a lot of movement onto kind of mobile payments just taking place on mobile technology and the like, that a lot of people are no longer using physical cards at all. Is the demise of the physical kind of plastic card that's just been around for however many decades, is that kind of about to go the way of the dinosaurs anytime soon?
Going, yes, for sure. I mean, we both established that we're quite old, but when was the last time you paid for something with a card? I mean, I predominantly use a phone these days, and so I think what you can't fight against is convenience. Convenience is an inexorable one-way journey to the increase of. And as soon as you get used to using a virtualized payment mechanism, you really never go back. And so that I would view as an irreversible trend in the marketplace.
One element of the payment space that perhaps hasn't fulfilled some of the promise that some people hoped is, of course, crypto and digital assets. Is that a part of the mix of the future of payments, do you think?
Undoubtedly. And also, just because some crypto companies have had issues, it's rather like the beginning of the internet, when the internet bubble burst and everyone thought maybe this is a fad, but it's not. The infrastructure that crypto provides is again somewhat inexorable. Eventually, most countries will have their own CDBC, their own cryptocurrency. Eventually, you will see crypto underpinning payment mechanisms as rails, and also underpinning stores of value. And if we are on any journey in the world of issuer payment processing, it's to being agnostic about rails, and including amongst others crypto rails, and also being agnostic about stores of value. So it's not just a fad. It may have had bumps in the road, but it's going to be around for a long time.
And of course, we've seen big tech dipping its toe ever deeper into the water. We've got Buy Now Pay Later from Apple. We've got WhatsApp Pay being launched in a number of emerging markets. What kind of role do you see big tech playing? Is big tech going to eventually kind of eat fintech's lunch, or are the two sides going to coexist quite happily?
The two sides will absolutely coexist quite happily. Big tech has a habit of buying, and then sometimes not properly nurturing and eventually destroying very creative little fintechs, and others come in and take their place. Big tech's raison d'etre isn't always the innovation of something which is tangential to their business, like financial services. That's as true of Facebook and Apple as it is of Microsoft. So that trend, I think, will be a kind of a permanent cycle. With regards their adoption of financial technology or becoming financial services providers, I think that's a more generic global trend. Everyone is becoming a provider of financial services. Embedded financial services are cropping up everywhere. Everybody is becoming an issuer, which is part of the excitement of being in this business, because your clients are no longer just banks. They can be anyone and everyone, from a fintech to a grocery store, to a bank, to a neobank. So that all is expanding the market. is offering, increased choice and value to the end consumer, and if we can be a part of offering increased value, choice, and also financial inclusion to the end consumer through that diversification of financial services, I think that's a good thing to do in the world.
I really want to thank you, Paymentology co-CEO Abe Smith, for joining me today. Thank you so much.
It's been a pleasure, Elliott. I look forward to my prize.
In the next live. Okay, so look, for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter @Paris Fin Forum. That's all for now. See you next time. Bye-bye.